We think emerging markets represent a great value here. We think, one of the externalities of the trade issue is both the U.S. and China are at the same time stimulating their economies while they jostle over trade. And what that means for investors is they could have both, call it plunge protection teams, if you will, on both sides of the pond, helping their stocks to stabilize and maybe even go higher from here. So our opinion is that emerging market equities have some catch up to do, and that could be one of the favorite ideas over the next 12 months.
When you say both China and the U.S. are stimulating the economy, when you say China, what measures specifically are you pointing to? The ones that they've been talking about for the past couple of days? Because, I mean, if the sell-off overnight is any measure, maybe people don't believe that whatever they're doing to stimulate is actually going to stay.
It'll take some time, but I'm referring to kind of the reserve requirement ratio cuts that they've done. There's some targeted stimulus that they've done in terms of trying to get domestic growth going. They've talked about their own tax cuts, interestingly. So, all of those different things will take some time to gain traction. We are clearly in a downdraft of sentiment here, but we're not surprised at all that markets have come back as the day has gone on. And then you throw on top of all of it that the Saudis are now talking about pumping as much oil as they can, and oil prices are down 5% on the day. I looked, gasoline prices are down 20% from their May highs. That's going to be a big boon to the consumer heading into the Q4 holiday season.
So explain to me the transmission mechanism of how a stimulated Chinese economy and a robust and maybe stimulated American economy would trickle through to emerging markets, and which ones stand to gain the most?
Sure. So, Tyler, the way it would work is basically it would allow PEs to expand a little bit, especially on the emerging market side. They've gotten very depressed. Two, it's going to help kind of stabilize those corporate earnings that everybody's worried about today. And then three, as far as where we would focus, it's probably still, to a certain extent, emerging Asia. They've had some better fundamentals. They also tend to lean a little bit more towards the technology sector as opposed to things like commodity production. So that would be maybe a slight preference for us.
So if you had to choose, Samir, fresh dollar to work today, since we have seen a market dip, in the U.S. or China, what would you tell investors?
We'd probably tell people emerging markets, and China is the biggest weighting, so we tilt a little bit more in that direction.